Welcome back. You're watching the market, and the Nifty and the Sensex down nearly half a point. Nifty trying to hold on to the 23,500 mark as we speak, and while we're seeing Nifty IT now going into positive 0.2% higher there, while Nifty Bank is weak at 0.9%, nearly a percent down. Let's move on to what's happening in the institutional space. We have Amar Ambani, Executive Director and Head of Institutional Equities at Securities joining us. They have their annual investor conference, Manthan 2026. Amar, thank you very much for joining us. Take us through, how's the mood like going into this investor conference? We are seeing an continuous outflow of money which is happening. Are foreign investors interested in newer stories, or they want to wait and watch?
Right. So thank you for having me. We're very excited to organize this conference tomorrow. We've been doing focused events for a long time now, but we thought it was a good time to organize a flagship event and then have this as an annual platform. And we've got requests from funds as well, so which is why we've organized this. So we have a large participation and hundreds of investors will be joining us tomorrow. 18 now is our partner, so thank you for that. You'll see it firsthand tomorrow. So the mood is as follows. See, as far as FIIs is concerned, let's just go back to pre-AI era, right? A lot of people are talking about AI and FI outflows and the current crisis. But if you look at right back from 2008, 2009 till date, you will see that the kind of money that used to flow in as a percentage of market cap during 2003 to 2007, 2008, that kind of money has never come through in Indian equities right from 2008, 2009, from when they left. So it's always been a much smaller number as a percentage of market cap as we progressed. So there's a lot more to it than just AI or something else. So in the past, I think the experience of the last 10 or 12 years investing in the Indian market has not been that great from a return perspective. If you look at in dollar terms, then over 10 or 15 years, they've not really made meaningful money here. The rupee has been depreciating, of course. And they had very attractive options, especially with the Magnificent Seven in US. And that's played out very, very well with the huge bull market that we saw in US. So I think that's one big reason that they were not coming in a huge manner. But of course, India had a good ROCE, India had a good growth story. So whoever had a history of coming into India did come now and then. Now, after AI, what has happened is, one is that the rupee is depreciating, and which dents your portfolio. And second is with AI, they now view India as an old economy stock, and therefore the multiples ought to be lower from their point of view. And then they are getting these trades in US and even elsewhere, and which is where you see them investing, whether it be Taiwan, whether it be Korea. I think that's where the money is going. That's where the trend is right now, and which is why I don't think they're going to return in a hurry. The other smaller problem is also related to taxation and things like that, which we've seen over the years change, whether it be F&O taxation, whether it be GAR, whether it be removing priority access to some of the countries like Mauritius. So all of that also played a role. So net, I don't see them coming back in a hurry. But if India was to get extremely cheap, I think at that point they will look at it. If the primary market takes off, I think that will be an opportunity where they come through, which is what they were doing till last year when the primary market was hot. Or if the global markets are overheated, then as a tactical trade, they may choose to sell there and come back to India. But net, I don't think we are still at a stage where we are going to see hordes of money flow into India unless something changes on the AI front, or like I said, we get cheaper, or our earnings growth surprises on the upside.
How are you seeing the earnings growth in that sense? We began at the end of March or before the West Asia crisis. We were looking at a 15% earnings growth. Now it seems that we will be sub 10%, and in addition to that, we have now the spiking yields globally as well. How are you seeing these headwinds for the market?
Yeah, so they're here, and I mean, as far as Q3 is concerned, at least I think things were better than what people expected. if you look at non-financials, then there's about a 14-15% kind of year-on-year growth, both in revenue and in operating profit. And even from a quarter-on-quarter momentum, there is a 8 or 10% kind of surprise that we've seen, especially in mid caps. And that momentum is also seen in the large caps. So net Q3 has been fine, but going forward, like you rightly said, I mean, there are multiple headwinds. So if inflation is moving up, there's a question mark on consumption. The government has done as much as it could in terms of its own spending on Capex and infra is concerned. So incrementally, maybe much can't happen there. Similarly, private Capex is happening in selective spaces. Yields will go up. So yeah, maybe you're looking at 10 odd percent or 12% growth next year, which may not excite FIIs as much. But of course, domestics have a mandate to invest, and as long as there's liquidity flowing through, they will look for opportunities to lap up.
You spoke about Capex cycle. Where do you see the maximum Capex coming through and the beneficiaries for that sector?
So we've not seen a full-fledged private Capex cycle play out in India for a long time. And again, multiple reasons. In the past, there were balance sheet issues which got sorted out. Post-COVID, a lot of them raised money. Balance sheets are clean. But even after that, we'd done a study and we'd seen that depreciation as a percentage was still higher. Interest coverages were just about comfortable. So again, not giving too much confidence for companies to go in for Capex. And all importantly, your capacity utilization, as long as that is at 74 or 75%, companies are not going to go out and add capacity unless they see that going to 80% or higher. So from that point of view, we've still not reached a stage where it's going to be a full blown out private Capex cycle play out. But we have seen power, we've seen renewables, we've seen these areas with cap goods in some parts of it. Infrastructure, of course. Real estate was pretty good in the last few years. These are some of the areas where Capex has played out and is continuously playing out. The other thing that will happen is, of course, in energy, we'll have refining capacities get added. So these are selective areas where we are seeing companies invest, and I think that will continue.
How are you looking at some of the key sectors like an IT at this point in time? You mentioned the fact that India is looked at more of an old economy, country now, and because of the Max 7 and the non-AI trade which is playing here. How are you looking at the traditional IT services company?
So I think once it was clear to us that this AI is going to have an impact on IT, even before that impact can come through on earnings, we sensed that multiples could correct. So we've gone underweight on IT, and we've been underweight for some time. It's played out. They've cracked really a lot, and there are some investors that we speak to who are looking at it as a value trade. But we are still underweight. I think there will come a time where it will truly be a value trade, but not yet. I think there are a few things. One is on the multiple front, it needs to enjoy lower multiples. Secondly, going forward, will you need 6 or 8 lakh kind of employees to do that kind of work for you is a question mark. They will have to rechristen themselves as consulting companies and AI implementation partners. And in that situation, will they get premium pricing or will they get average pricing? So that also is a question mark. And therefore, and of course, while we are seeing that they're not yet impacting earnings so far, the again question is that maybe 1 year, 1.5 years later, it kind of hits the roadblock where the deal flow is not as strong as we are seeing currently. And even now we are seeing that while the deals are being announced, the takeoff is still taking time, right? The good part is that IT companies are announcing in their earnings that the AI work is also taking off, which is good. But I think we need to get a lot more clarity before we start going overweight on this sector. I think there's still some more downside, but there will be a time, but not yet.
Which are the companies that you think that are ready for the AI transition, and companies which are still in a work in progress mode?
Well, without taking names, I would say that obviously and naturally the larger ones are going to find it that much more difficult to steer the ship and change course. The ones which are in the mid cap space, small cap space are a lot more nimble and in a much better position to quickly change course. As far as deals are also concerned globally, a lot of AI deals may be dished out as a much smaller tranche of deal, and a smaller company will be in a position to take that deal, and it will still be a sizable one for them, whereas a large company may not still move the needle for them. So I think from where the story can play out much better is going to be, for now in the medium term, maybe the more nimble players. But of course, you can't rule out the large cap ones. They've been around for a long time. I think the time will come when they will also pull up their socks. Just like we've seen in auto, we've seen the new age startups did so well with two-wheelers, but then the heavyweights like Bajaj and all, TVS, they kind of pulled up their socks. So I think that day will come as well.
And how do you see defense play? Because you're bullish on this sector from a multi-year point of view.
Yeah, absolutely. I think the way the geopolitics is playing out, every country, it's become very clear that they need to invest in defense. And no longer are wars going to be fought by sending your troops to the other side of the border. It's going to be fought by drones and whatever else you can throw from your side of the border. So I think investment in defense is going to take place. In fact, we've just come up with a report yesterday on how we are seeing long-term trends play out. So if I can just tell you that for a minute, post 2000, a lot of countries that have current account surpluses like Japan, China, Germany, the oil producing nations, they had surpluses, they had savings, and they used to not do too much of capex. So they used to deploy that money into financial assets, and most of that went into US. Now that trend is changing, and post COVID, we've seen that more and more investments are going into capex, into defense, into reshoring supply chains, into manufacturing at home, and all of that is triggering that capex boom. So I think defense is a very important area, and all countries are going to focus on it.
You spoke about power and power utilities and how and power infrastructure companies may be benefiting the AI and data center boom. Do you have any picks there? Which are the top picks for you from a brokerage point of view?
So today I don't have stock specific ideas, but as a sector, of course, we like it a lot, and everybody knows the case. I mean, but if I can just tell you by one instance that I read globally in US, take Virginia for example. Last year, the data centers accounted for 25% of the power consumption there. That's the kind of power that will be required. And usually, just to put that in perspective, usually 2 to 3% is the kind of power consumption by data centers. Of course, Virginia is not a perfect example because that's also like a hub of data centers. But that is the trend globally, which is also going to catch up in India with some large players putting up data centers. So I think whether it be data centers, AI, EVs, there's going to be a huge demand for power. And there are these few 5 or 7 names, the listed well-known names. And I think you have a few good plays from those.
Amar, it was a pleasure talking to you today. Thank you very much for joining us. Amar Ambani from Yes Securities. They have their annual